Hi everyone and welcome live from the New York Stock Exchange. My name is Douglas Yones. I'm here joined by a number of friends from the ETF industry. I want to start right away with Larry Medine, founder and CEO of Brandometry. Why brand and why now?
Well, I think it's a hugely overlooked opportunity given the amount that brand currently contributes to a company's valuation. Now, if you go back 25, 30, 40 years ago, intangibles, brands represented maybe 20% of a company's market cap. Today, by most estimates, in excess of 80%. So having the ability to make decisions on brand as a metric for investing is really new and an opportunity at this time.
So we're looking at brands. You've then taken that work and that research and you've packaged that into an index.
That's correct.
All right, help us understand the index. What does it do? How does it perform? What are you looking at?
Sure. So what we do is we look for companies that have really strong brands, and we use data that's available just to us to find that information. And so we look for that strong brand score, and then we look for an underlying market value or the stock price that's been disconnected for some reason. And that creates an unrealized value for us. And that's what we use to identify companies that go into that index.
So Brandometry builds the index. We then worked together to build an ETF. You now have an ETF listed on the New York Stock Exchange, BVAL. I'm also joined by Ron and Todd, owners of a registered investment advisor, a high-end boutique firm managing money for clients. Help us understand a little bit about the firm.
Yeah, so we're an independent financial advisory firm. We help our clients build, grow, manage, and then protect their wealth. So our clients are closely held business owners, entrepreneurs, professionals, executives, and retirees.
And your advisory services is using ETFs more and more, I understand. Help us understand why that is.
Yeah, absolutely. ETFs, obviously, the first one started about 25 years ago, with more and more being listed on the New York Stock Exchange. Really, it's the transparency. You can see the holdings of the ETF. It's the cost of the ETF, which is typically a little bit lower, but also it's the tax efficiency of ETFs and really putting them together for the right portfolio for the client. And depending on what their goals and needs are, that's where we're placing the ETFs in.
So Larry, lots going on in the marketplace always, right? Significant bull market run. You know, when you're thinking about the index and the index performance, you know, where do we go from here?
Well, I think the index gives people the opportunity to have something that kind of looks like the general market in the way that it performs. So it kind of is a satellite to a core holding, but it also gives you the ability, because of this unrealized value, to have opportunities to get a little bit of excess return. And that's what we think that this index, which drives the ETF, will do.
Help me understand, how does brand value maybe help companies or not help companies if, let's say, we are not in a fantastic bull market?
Well, first of all, there's a difference between just owning really well-known brands and owning brands that have an unrealized value component to them. So if we feel that there's currently a brand is discounted and that's why it's in the portfolio, it probably gives you some protection on the downside. But what we've really found is that strong brands lead when markets recover. So there's two opportunities that a good, strong brand can give you.
Thank you, gentlemen, for being here. Thank you for telling us more about BVAL, listed here on the New York Stock Exchange. Another great investment insight corner from us here at the New York Stock Exchange.